Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Art Jarvis, welcome. Taking Stock, episode number 43.
43.
Welcome back.
Just chugging along. Thank you. Good to be here, as always.
And it's great to have you here. Yeah. I think, I closed out the last episode with saying, by the way, I enjoy this too. So we'll start this episode with, by the way, I enjoy this too. So it's,
good. I'm glad.
It's good to have you here. But today, holy smokes, we promised that we were going to do this, the Taking Stock 2025 predictions, and we are.
Yep.
And you did you did your homework, folks. I've got a piece of paper here where I won't have to write them down this time.
There we go. That piece of paper has some words on it.
He's holding himself to the fire on these. It's in print, but he's going to tell you, the listeners, and tell me as we go through what the forecast is for 2025. But holy smokes, everything that's happening, we could talk about a whole lot of things today.
Oh, there's even the last few weeks could supply us with several episodes. But the thing is in between this and the next episode, there'll be a whole bunch more for us to talk about. So we'll never catch up.
Yeah. Does the word tariff bring anything to mind?
I heard the word tariff somewhere. I can't remember where I heard it from. Oh, yeah. Good Lord! Yeah, it's all about tariffs, right? Well, not all. That's a big chunk of it, that's for sure. But and it's interesting. I mean, I don't want to get ahead of you, but it's what is happening.
Get ahead of me. You're ahead of me when we start, but that's okay. just for the record.
It's like, what's going to happen? How's it going to happen? Where is it going to end up? And how it. If I didn't already say that, how it gets done. I mean, even so, President Donald Trump has been president for 2 weeks. So I mean, the market has been bouncing up and down a pretty good.
Yeah, how about
good amount?
Just on a side note, and again, as we record this on Tuesday, February the 4th, so on Monday, February the 3rd, plummet because of that word tariff. Yeah. But what a bounce back climb as the day went on when we saw what the agreements were, or the press pause with Canada, press pause with Mexico. Mm-hmm. Not so much just flat out press pause, but the Canadian Prime Minister says okay, or whatever his title is, President of Canada. I mean, I don't know. I think it's Prime Minister. But the president of Mexico says, okay, we'll do this. So, the tariffs are having their negotiation effect.
And I think you're nailing it right on the head there. I think our president, current administration, has a way of doing things, and I think he's doing it, or they're doing it. I think, okay, we're going to hit you with 25% tariffs. Okay, here it is, boom, Saturday, okay, 25% tariffs, and then, a day later, 2 days later, it's okay, we're going to put it on pause for 30 days. Well,
but in the meantime, what was their response? That's the key.
So it's retaliatory tariffs.
But they threatened that, but at the same time, they backed off of certain things and said, yes, we'll do this. Mm-hmm. So it goes on and on.
It brings them, in my opinion, to the table. Okay,
Perfect.
I'm serious about this, so we can do it the hard way, or we can do it in a more beneficial way. Yeah. Maybe that where we can come to an agreement, we can come to a compromise. I think that in most ways, I think that's usually probably the goal. I'm going to get you to the table, and I'm going to do that however it takes to get you there, and then we're going to try to find a compromise that I agree with the fact that we are far, far away from where we should be when it comes to our trade with other countries and things like that. So it doesn't have to go all the way from 0 to 100, but somewhere in between where we are and where we should be. is where I think we're trying to get to, and that will occur. Okay, interesting to me, since we're now fully on tariffs, is so technically well, number one, Canada is what, our biggest trading partner,
right?
Okay, number one. They're our northern border. You got Mexico. There's our southern border. Same thing, right? Guess what? China is still getting hit with tariffs, right? Either they haven't come and said, hey, let's try and do this, or we're not worried about it. So we'll see where that comes from. But, I put it at the top of that piece of paper I handed you. I put, 2025 taking stock predictions. And last year, I think I said...
Wait a minute. Don't stop there. Don't stop there. No, okay. You put 2025 taking stock predictions. Buckle up! Exclamation point.
Right.
I just want the listeners to know for sure what exactly is on. And we're going to go through 5 things. And we're going to transition to that. But I want to touch on something. There's so much news. So much economic news. We just said we could do several episodes, but we're going to stick with the predictions. However, we're going to take a sidetrack before we transition to that real quick.
Okay.
Holy smokes! 2 plane crashes.
Jeez, yeah.
That's not the financial world, but there was plenty. This is as much a news show too. We talk about what's going on in the world. A commercial airliner and a military helicopter, and then 2 days later, a med evac plane that was Mexican-owned, with Mexican crew, Mexican medical crew, and 2, Mexican patient and Mexican mother, which I'm just saying it was in our airspace, and it was an interesting, but just 2 horrific tragedies in the air.
And so if we're going to try and put that together with the markets. I'll say it in what is going on now, and what about that is uncertainty. Okay, I don't know what happened, but let's say the medical plane, something bad happened mechanically, right? The airline and the helicopter, to me, that's more not interesting, but I want to hear the rest of that story when it comes out, right? If it comes out,
somebody's at fault in that one.
Someone did either a bunch of people did something they weren't supposed to do, or didn't do something they were supposed to do, or there's something more, whatever, nefarious going on. But that provides uncertainty, and we know the market doesn't like uncertainty. Right. So you take that, and then you throw the tariffs at it, and you just... And the reason I put buckle up on the sheet is because I really think this year is going to be a year full of uncertainty. I think we're going to get these great big announcements that this is going to happen, or we're going to do this, or we're going to do that, and then
the market's going to respond,
and the market will certainly respond.
Right?
Yeah, but then
react is probably the better word. React.
So again, you've heard me say, with chaos comes growth, and with volatility comes profit. Right? There's nothing. I'm not against things.
I've never heard you say that.
I'm not against shaking things up, and I'm not against stirring the pot unless you're stirring the pot to truly make things better. Right? Yeah. If you're just stirring the pot for the sake of stirring the pot, then I can deal without that. But no, I think we're going to have some volatility. That's going to cause some gyrations in the market. But more importantly to me, where is that going to get us, and what impact does that have on our economy and the global economy?
Well, and your forecast gives us an idea of what you're thinking the impact will be. So buckle up. And then number one thing you wanted to talk about in terms of predictions was the stock market. So what do you got for us?
Everybody, our 401ks and our investment, all those things that depend on what's the market going to do. So, we are currently sitting a little bit above 6,000 on the S&P. So, I always come up with a range, but I put 6,900 on the S&P 500. So,
and my reaction, because you handed me the paper, I looked, I said, S&P 500 hit 6,900. I said, wow.
Yeah.
That was just my response.
Well, that would be great, because, we had a great year last year. The end of 2023 was very good. Last year was a good year, especially if you're in the technology sector. But if we take the end of 23 last year, and if we were able to, which equates to an additional 17% from where we started the year at, guess what? It works for me. It's that'd be great. But you also have to remember we've got some making up to do. 2020 was a nightmare, and 2022, from an inflation standpoint, didn't do us any. Market dropped over 20% that year. So, that's great. We have some great years, but we also have, this is the point where we kind of make back some of that money that we lost. So, but yeah, so 17. So that would put us up 17% from the end of the year, from where we are today. That would put us up another 14%. So we're up 3% or so already this year, in spite of all the volatility and everything.
Well, you said, chaos growth and volatility profits, so hard to say in spite of.
Yeah.
More like because of.
Well, because of. Well, it depends. If there's chaos and volatility, are you the person that goes running out the door and sells everything because you're scared? Or are you the person that comes running in the door and takes that as an opportunity? Right?
Yeah.
So
that's the question for the listeners.
Yeah.
You already know who Chuck is on that. I'm just like riding the wave.
Ride it, yeah. Hey, it's easier said than done. I mean, if something really bad's going on in the world and the market drops 10-20%, it makes you nervous. But
well, you call your clients and listeners. I am not a client of Jarvis Global in that respect. You're not managing my money, but our money guy, he calls us. So when I say Chuck rides the wave, well, unless Sean calls and says, hey, this is happening, and we need to meet and talk about what kind of adjustments you might want to make. But that's what you do. You'll sit with your clients, and if something drastic's changing, say here's how we want to respond to it to ensure the continued growth of your portfolio, or the protection of your portfolio at least.
Oh, 100%.
Yeah. So
I mean, the conversation is, I have 100% discretion on portfolios. I make the decisions based on the parameters that we've set up and how much we think, liquidity needs and time frame and risk tolerances and things like that. We've set that up. So, based on those, but that doesn't mean I operate in a vacuum.
Right.
Hey, I know bad things are going on or great things are going on. Here's why. Here's how we're reacting to it, and here's how we're going to structure the portfolios based on the information that we have. So, yeah. So, for those who, by the way, are a fan of the Dow Jones Industrial Average, which I really could care less about.
I saw that number too, but that just is.
Yeah, but that puts us.
That extrapolates, right?
Yeah, I just took the 17% and put it to where the Dow was at the end of the year, and that puts you right around 51. Almost at 51,000.
And Dow closed yesterday at 48. What?
I think it was 40. Was it 44? As I said,
I just said 48.
Yeah.
Maybe
so 44,020.
Oh, okay.
Or 200, so
all right.
So you're going to go. So the Dow from where we were yesterday might go up 7,000 points, but
over the next 11 months.
I do think so. That brings up an important thing. So last year was very heavily technology driven. My hope for the world and the hope for the markets is we see a much more broad-based move up this year. So, it's not all about technology, right? It's not all about NVIDIA. It's much more, and I think that's based on the way we're looking at things. Things like financials and maybe healthcare and industrials, and even so, like consumer cyclicals. Hopefully, we'll see those, much more broad.
And this is your forecast, is that we will see, these things driving the market.
Yeah, and that's how portfolios are structured. You will see. I mean, they're always diversified, but when I'm going in new money or we're making some changes, I'm definitely taking into account some of these sectors that I would think normally would have done better, and in my opinion, have been neglected over the last year or so.
Well, that's an in-depth look at number one of the predictions, which is what's the stock market going to do, and at the head of that, the S&P 500. The prediction is we'll hit 6,900 So there we go.
There we go.
Moving to your number 2
Yep.
on your list of 2025 taking stock Art Jarvis forecast predictions. Buckle up. I'm going to say that every time. Buckle up. So interest rates, and you got my attention with what you're thinking there too. So tell us, what are you thinking on interest rates?
Well, so I got to be honest, kind of consternated on this a lot.
Really?
And let's be clear, number 2 has a big impact on number 1. Interest rates has a big impact on the stock market and
Sure.
things. So, I guess where I come out on interest rates is that I just don't see a really good reason for us to have some major cuts in interest rates, right? But I also don't see any great reason right now for interest rates to go through the roof either. So, let's say today, let's just take a round number. Let's say we're at 4.5% on the 10-year. I could see where we could drop down to 4% or so. But I also acknowledge the fact that, especially more toward the second half of this year where we could see it. And I put in my prediction for 1/4 point rate decreases, right? So,
Right. 4.
Yeah, so that would put you down 1% from where we are, but at the same time, I've got the 10-year only dropping 0.5%. So, just because they cut rates doesn't mean interest rates come down at the same pace. And ask people who are in the mortgage business. We had 3/4% cut in rates last year at the end, and it was not reflected in the mortgage rates.
Yeah.
So I think this economy, from what I'm seeing at this moment in time, the economy is very strong. You've seen the inflation numbers work their way back down to my favorite number, 3%, and 2.9. It's not 9%
I've never heard
anymore.
you say that before.
Yeah, right, yeah. I'm a creature of habit. But, but what's the impetus? What's the reasoning to say interest rates should drop substantially, or what's the reason to say rates should go up substantially? I just don't, at this moment in time, looking at what we see today, I really don't see a great reason for them to move anyway. And we've talked about this, I'm even more perplexed by, we've got inflation down from 9% down to 3%, let's just call it. But we've also cut rates now by at least 0.75%. So we're having the rhetoric where I'm not happy with inflation, but at the same time we have the current administration saying rates should come down and they should come down immediately. Well, that's the equivalent of stomping on the accelerator. Okay, so
Right.
If we're not happy about where inflation is, you don't go and pump more money into the economy, right? So unless there is something offsetting in the future, right? So whatever that may be, with the policies, what kind of economic reaction does that cause? So anyway, very long-winded way of saying, okay, that's my prediction. But
which taking us back, so and I get as you discuss it and explain the prediction, it really reveals, like you said, it was a point of consternation for you to really think about it. But ultimately, your interest rate forecast says you're looking for 4 just 1/4 point rate drops. Basically second half of 2025, so that's off in the distance. However, and I like this because the 10-year Treasury bond forecast is actually to only drop 0.5% from 4.5 to 4. One of the key things, and you didn't need to go into it, but that's the normalization of the yield curve, and you said that's going to be a continuation. Seeing that throughout the year, a continuation of the normalization of the yield curve.
it's a lot of zations.
A zation in our nation, but in our nation's economy. Which brings us to, as you touched on at the end, stomping on the accelerator is not what you want to do, but we do want to see what you have to say about economic growth for 2025.
Yeah, I think as long as the consumer stays in it to win it, which I don't see any reason at this moment in time why they shouldn't. I most certainly, I think I said 2 and 2.5% range for economic growth during 2025 Wouldn't surprise me if we saw a 3% number, but I think a nice 2 to 2.5. That's a good number, right? It's.
Well, is that another one of those where you liked 3% better?
Well, 3% is better than 2.5. I tell you that right now.
I'm just wondering,
But no, it's not. The economy obviously it bounces around all over the place. So even last year, so we ended up with whatever it was, 2.9% annual growth. But in there, we also had and you looked at this quarter, we were at 3.3% annual growth, and you look at this quarter, we were at 1.5% annual growth. So, but you look at it, over that 12-month period. Hopefully, it's if we do 2.5-3% continued growth in this economy, and everything else remains equal. That's a recipe for a good market. Let's put it that way.
And how does that help? I'm going to just transition right to your next forecast. So how does that help the job market, aka what's your forecast for the unemployment?
I think right now we are hovering around what you call the normal unemployment rate, or that's escaping me. Natural level. That's what I was looking for.
It's like water's going to level out.
Yeah, and I kind of, as I went through doing this, I kind of felt like, nothing would surprise. It wouldn't surprise me if this year, if we finish this year and we look a whole lot like we look at the end of 2024. Just we've moved forward and earnings numbers have gotten bigger and things like that. And if we get more earnings numbers and slightly less interest rates, then we can have you can have some profits this year, especially once again in sectors outside of this. I still think technology is going to do well. Don't get me wrong.
Right.
Okay? I think the thing there is we need to keep an eye on technology. We need. We don't want to get into a .com bubble kind of situation.
Right.
Okay. We don't want to get too far ahead of ourselves. It's great. Great things are happening. Artificial intelligence, robotics. Blah blah blah. Good things are happening, but there were great things happening at the end, like 1998, 1999. Technologies, great things are happening. We got way too far ahead of ourselves, right? And we paid the price in 2000. That's something for me. Just keep an eye on, but at the same time, keep an eye on that, but also trying to find those neglected sectors. So
makes perfect sense to me. An interesting, just talking about the job market, and you threw into your forecast the talk about wages slightly, with the comment a lack of a qualified workforce could continue to put pressure on wages. How do you define that? What's your explanation there?
I think. Well, there's several things going on. We are now in the process of sending a large number of people back to their home countries. So there's less workers there. To balance that out, we kind of had the side discussion before we start talking here. Is we're also have a concerted effort to take a look at the government and the number of individuals that they employ. How many of those people are going to lose their jobs here in the not too distant future? So, but then I use the word qualified, but then what are they qualified for? Are they the jobs that we need filled? Are they qualified for the jobs that we need filled? Right. So, but
So the impact is well. I mean, I guess the forecast question is: do we expect, or should we expect, to see wages increasing?
I still think we'll see the wages increase. Yeah, I think we're honestly, you've seen big ones, dock workers, United Auto Workers, things like that. They get 25% increases over the next 3-4 years, 30% increase over the next 3-4 years. So we've seen those big ones, but I think there's still some kind of trickle down where they're still going to need to play some catch up, right? So
outside of the unionized positions,
exactly.
Right.
You're right.
Yeah, I gotcha.
Yep, precisely.
And that brings us, as we near the end of episode number 43, that brings us to the last of your 2025 predictions. Inflation. Oh my gosh. Our favorite topic in 2024. Right? So, anyways, inflation. So, what are you thinking?
I'm still in that 2.5% to 3% range. That you got Chairman Powell out there still talking about 2% inflation. I still think I'm not going to call it a pipe dream, but I still think there's way too many things working against them to get them down to 2%. So, if we're in that I wouldn't be shocked if we stayed in that 2.5% to 3% range on inflation. The one thing I do like is hopefully somewhere down the road here we're talking about inflation a lot less. Right? Let's move on to. I mean, we've beat inflation.
Well, we can decide that.
Years.
We can decide that. We can ignore it. We can just talk about something else, and everybody knows what's going on with inflation, because when inflation is an issue, everybody is talking about it, right?
And that's the problem. Like, we're still suffering from 2022, right?
How can you ignore it?
Can't.
And that's the thing. It's like still suffering from an inflation rate that neared double digits. It neared double digits. It was 9+%. And the problem is, as we've discussed ad infinitum, all too frequently, with inflation, it doesn't have its okay. Hey, we're down to 3%. Well, it's still inflation. It's still a 3% inflation. So on top of the 9% that it reached, we're still continuing to inflate at a rate, and the prices aren't going down.
Right.
So I would love to have seen on here a prices forecast.
Well, yeah.
It said grocery prices are going to drop. Things are going to get better at the grocery store.
Yeah, don't hold your breath on that.
So you don't even have that in the hidden little, because I know you got Art Jarvis's bombshell surprise.
Yeah.
Maybe you don't have that one this year.
Not really. I gave it some thought, and I guess I just kind of decided it wasn't that productive. So, but there's a few things out there that wouldn't surprise me again. But from a
say it, huh?
From a global standpoint, no, I'm not going to say it.
Fair enough.
It might pop out in a later episode.
Well, how about this? So, the Federal Aviation Administration is going to make some changes on airspace at the Ronald Reagan Airport in D.C. How about that?
That's probably a very high probability prediction.
Go with it.
I mean, you're looking at one of or the busiest airport in the world, right?
Yeah.
And it's they're not landing on the outskirts of Atlanta, right? I mean, they're landing next to, and then you have a military base right next to it, right? And so their checks and balances, their policies and things like that, clearly they need to take a look at them, because it's not only just that one clue. I mean, you start talking about near misses and things like that.
Right.
Well, if you have enough near misses, somewhere along the line, you're going to have a problem. So yeah, I don't disagree with you there, but I just think I think here's the biggest thing for this year. That the biggest thing, if I'm looking for what changed this year from last year, is that I think corporate America is much more comfortable this year making some decisions that they weren't comfortable making last year. Right. So if they're gonna increase capacity, they're going to do some capital spending and things like that. I think they're less worried today about the impact that taxes will have on their decisions, and also, let's say, healthcare and things like that too. I think they feel more comfortable today that there will be less surprises in the near future. Right. That may have been. I talked to a lot of people who are in sales and things like that, and the basic comment is since November that all of a sudden sales they're coming out of the floor, right? They're all of a sudden all these people that have been sitting on things have made a decision to move forward. So that should have a positive impact on 2025.
Fair enough. Well, I want to use the last seconds of episode number 43 to remind us and lead us into what will be episode 44 in 2 weeks from now. Let's talk trade, U.S. trade and trade partners. And I was going to say, maybe there's a forecast in there about will we have better trade relations with trade partners around the globe than what we had in 2024. Something to talk about in the next show.
Yeah, that'd be great. And I think the opportunity to talk about things like that is going to be continually presented to us. So
well, that
might become the new inflation talk.
It is going to be front and center over the next 2 months for sure. I believe,
or even longer.
Well, for the next 2 months for sure. Yeah. Certainly for 30 days, because the pause button was pressed for a 30-day pause on I'm going to level 25% tariff against Canada and Mexico, and we hit the pause on that. But anyway, it's not going to be just let's talk about tariffs, but let's talk about our import export, our trade relations with our trade partners around the globe on our next episode.
Yeah, I would actually enjoy that, because there's a lot more trade partners out there than just China, Mexico, and Canada.
That's the point.
Yeah. So it will. This administration will work their way through them, I guarantee you. So.
I believe that. Yeah. And last note from today, what struck me in the conversation today, Art, was you talking about the uncertainty. Yeah. And we were feeling like one of the things we were going to see in 2025, or at least because of the new administration, because of the election results, was certainty. Mm-hmm. We're done with the election, so that uncertainty's gone. Yeah. But yet, one of the big parts of the forecast for 2025 was there's going to be some chaos, some volatility because of uncertainty. So that really caught my attention. We'll have to talk about that some more.
Yeah, we got a lot of sayings in this business, but one of them is the market climbs a wall of worry, and that's one of the earliest ones I can remember coming out. And back in 1991, I probably didn't have the full impact of that comment, right? But 38 years later, or whatever, 38 years into this business, it's crystal clear what that means, and I've seen it multiple times. The world's coming to an end. Well, guess what? The world didn't come to an end, and at the same time, we all made money during it, right? The recession. We talked for 2-3 years about the impending recession. What recession? Hasn't happened. Going to happen somewhere down the road. Didn't happen though. So it's definitely. But let's remember, from a business standpoint, there is constantly new money coming into portfolios and things like that. When something like what happened last week with the AI information with the China I can't even get it right. But so that really stirred the market up big time. Sure, yeah. And then now you talk about tariffs and all that stuff. Well, guess what? That makes the market drop 2-3%. Well, guess what? That's an opportunity to take some new money and put it to work.
Right.
So works for me.
Well, the wall of worry, you don't need to worry about, listeners, because we will be back in 2 weeks. And though the world's not going to end, Taking Stock episode 43 is ending right now. And again, Art, listen, thank you so much for being here, sharing your insights. I've got it in writing, so we're going to hold your feet to the fire next January. How did 2025 really shake out?
Yep.
But thanks for being here today, and look forward to having you back in 2 weeks.
Yeah, my pleasure. Thank you very much.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.